Was good, everybody? Hopefully everybody is doing great and everybody is doing okay. It's another Thursday, a CPI Thursday, and I'm here as usual. And the purpose, I guess everybody knows it very well. The purpose is to get 1% better all day and get to improve in whatever circumstances or situation that we've seen some mistakes. So it was a good day for me over here and another good opportunity to test and also learn something. So before I start, I have an announcement. Kindly, it only takes 1 second to please like the video and also to tap that or smash the subscribe button so that whenever I'm uploading you get to see my videos. So over here you can see I was trading the Swiss franc GPY, and you can see my trade that I had. I think it's a sniper trade, but I'll be explaining why I was in sell and why the lesson of today is my 1 to 2 is all I need. My 1 to 2 risk to reward. I don't know whether I should say my 1 to 2 or 2 to 1. Yeah, anyways, my 2 to 1 risk reward is all I need, and also yeah, all what we need as traders. So I was in a sell today, and let's go to the higher time frame so that I may get to explain why my reasoning, why I was in a sell model and what CPI did do today. So over here what you can see is let me push this further. Let me go to the daily so that this is the daily. Let me push it kind of further and take it to the level. Then later on I'll pull it back. These week consequent encroachment, the premium and the discount of this week over here. It was on a Friday 5th consequent encroachment. So yeah, so dropping to the lower time frame is what I really saw is we have this price action around this level. I don't know whether you can see this. We have many things marked up here, but hopefully you'll get to see how these candles are forming. We have this up close candle here, another down close candle, a bullish candle, another down close candle with the wicks rallying higher, and above here this candle, CPI candle, we had it rally higher, that cleared these highs, then rallied lower. So today I guess most stop losses were taken out today because probably stops were above these highs, slightly above the highs or here, but CPI took the stop losses, then rallied as I wanted to say the market rally. But the one thing is my 1 to 2 was enough, but I will tell you something that had happened, and I'll explain why my 1 to 2 is all I need, right? So as I was reading price, what I saw is we had these at around 5, because I look my markets after London session, because over here after doing my work or my necessary duties, that's when afterwards I look into the charts. So after the London session has closed, so over here I saw this candle close. So as I was watching it, I used my array to see whether the candle had closed below the mean threshold or the consequent encroachment of this candle, consequent encroachment, and I saw this candle had closed below. So this to me was a confluence that I'm going lower, or I'll be bearish for the day, and I had to see the price action that had already taken before. So seeing this price action, I saw this other candle respect this order block rallying lower, but I was watching the 4-hour candle. So yeah, I dropped to the the 3-hour time frame. Then I saw there wasn't clean price action around this level, so I dropped lower to a 2-hour time frame, where I saw we had this down close candle that this candle had closed below the low, so increasing my confidences, or this price action is showing me that I'm expecting lower prices. Then we had this order block, this bullish candle acting as resistance, preventing these prices from going higher over here. Then I spotted this other candle, but we had a huge movement of price inside this zone, but the 2-hour showed me this price action around here that for sure it should be bearish. Then I dropped lower to the 1-hour time frame, and what I did see is we had this price action over here. So hopefully you can see, yeah, we had this price action over here, this bullish candle. Then we had this sharp retracement lower, this heavy down close candle, rallied higher, this candle preventing price from closing above it. You can see it closed near the open, or the close of this candle. This candle over here closed near the close of this candle. Then we had this sharp retracement lower that created a fair value gap inside there. So at around it was a 4, that's when I was watching this price action, and I saw this fair value gap and I wanted to see it being respected. So after I spotted this fair value gap, this was to be my entry to target a 1 to 2. So I was watching this candle form. So around 4 I was watching that candle. Then I dropped lower. Inside this 1-hour fair value gap, there was this 30-minute fair value gap. So I also wanted to see market react of this 30-minute fair value gap. Drop lower into the 15-minute time frame. I saw everything was balanced here. In the 15 minutes time frame, everything was balanced, but in the 5 minutes time frame, that's when I noticed we had an inversion fair value gap that was a level for me to see a turn, from which I wanted to see a turn point for price. So over here you can see this candle. I didn't want to see the candle close above, but it did happen. Then sharply we saw this down close movement of price sharply. Then this is what I wanted to see, because it's reacting off premium levels, and I'm in a sell. So I wanted to see this price action lower that closed below this 1-hour fair value gap. I guess you can remember this 1-hour fair value gap. It closed below. So to me, I was in a sell. Then I saw, as I was watching it, I saw this retracement higher and a fair value gap plate open there. So this is where I placed my sell limit and my stop loss above that high. Then we can see why my 1 to 2 is enough. Over here, 1 to 2, the market rallied sharply, took my TP. Then what happened next? I took my partial at around this bullish candle, a half. Then I left the other one. I thought this was a retracement, because we had an inversion fair value gap over here. Then I saw a close above this candle. I should have taken maybe another half out, but I had this key level here, this 1-hour fair value gap, so I didn't take anything. The market tapped into it. Then I saw this reaction and I was good, because it was heading to CPI. I thought yeah, this was a good trade for me, but that wasn't true. Then what I saw is we had this down movement. In the 5 minutes it was clear we had this downward movement. Then I spotted this inversion fair value gap around here. The market tapped into it. Then we had this displacement lower, which was good for me, so I took. Then the market started rallying higher. I took out my 1.5%, so meaning I was left with another 0.25% that then we had during the CPI that was taken out. so I had a quarter of my position being taken out, but the good thing is I had taken out my partials, I had managed my profits okay, and then we can see the market rallied higher, cleared everything, cleared all the highs, including Wednesday's high over here. It was cleared, then we can see that sharp retracement lower what we wanted to see. So yeah, my 1 to 2 is enough, and I'll be taking my 1 to 2, and that will be well for me. But also one thing I noticed that was a confluence to me also is this Asia range. We can see it over here, the market rallied lower, retraced higher, cleared the liquidity over there, then I saw this retracement down that created a fair value gap there, right? So Asia range to me today was helpful. After seeing the liquidity had been engaged above this high, and see the Asia had been engaged, retraced lower, rallied higher, that's when I got my 1 to 2 downwards. But as I've said, I did manage to take my partials out, and that was it for today. So my key point is let a 2 to 1 RR or risk to reward ratio be enough for us as traders, because you can see today it was taken yesterday. From yesterday's video we saw 1 to 2 was taken, then the market continued rally. But sometimes we can see situations like this, the market tap the TP or is near to tapping the TP, then it rallies back. If maybe you took this 1 to 2 and another opportunity arises, then it will be another good second trade for you. So it's better for me to take a 1 to 2 if another opportunity arises, if in case of a retracement, and then I'll be jumping in. So that is it for today. Thank you for being around. Thank you for watching this video. Remember to like and subscribe. So see you then. Hopefully we got to learn these other days. So until next time, bye bye.